Today, I'll be covering the top 5 cryptos that I would sell right now. Yes, with the market entering a short-term euphoria stage, there are still tons of good sectors that will continue to grow, but also many that are overvalued now and I will clearly avoid. The cryptos we'll be covering today are not bad projects. We won't be talking about bottom-of-the-barrel scams. Instead, these are very well-known established projects that I just think either are overvalued based on their current adoption or they have certain alternative picks in their same sector that are less known but have much higher potential. Welcome back to the Virtual Bacon channel. My name is Dennis and I'm a crypto angel investor for the past 5 years and I have invested in over 100 crypto companies. On this channel, I share my views on market trends and investing strategy to build wealth in crypto. Before we get started, make sure to join our Discord with the link in the description or go to discord.gg/virtualbacon. We have our free VIP program that I post my daily updates, altcoin alerts, and trade setups completely for free, and you can join the discussion with like-minded crypto traders and investors. Okay, let's get into the list, and the first crypto project that I would sell right now is Binance's BNB coin. Just 3 weeks ago, we have already covered this news where Binance has officially settled with DOJ, and Binance itself and its founder CZ have both pleaded guilty to their money laundering and evasion of regulation charges, and this has led to Binance CEO CZ stepping down from the CEO role and potentially still facing a prison sentence. Binance company also has to pay $4.3 billion in fines to the DOJ. Not only is CZ's role and the fine a big hit, but also this opens up a lot of future hurt for Binance as they have signed on an unprecedented crypto surveillance rule. With this settlement, Binance will comply with a 3 to 5 years long surveillance program with the US regulators. They will need to disclose every US related transaction in the past and in the future and share all of these records until they are fully exited out of the US markets. So not only is the regulators not happy and will track all their transactions, but also they don't even want any US customers to trade on Binance. This really seals the deal for Binance's full cutoff from the US. Since US is one of the largest crypto user bases in the world and potentially growing way larger in this upcoming bull run fueled by the Wall Street adoption and the spot ETF, this means Binance will lose out on the largest market share in this cycle. Now, this also completes my thesis of the Black Swan event that needs to happen before the bull run starts. We covered this in our last video 3 months ago, titled 3 Realistic Events That Can Kill Bitcoin Forever. And one of the top looming events in that video was Binance's collapse as fueled by the pressure from US and Wall Street. So now it's safe to say that the attack on the king of crypto, which is Binance, has succeeded. And the US regulators aim to replace it with the US TradFi cartel led by BlackRock. Even though Binance is still one of the most dominant exchanges today, taking up 36% of the market share in spot trading, it is steadily declining. We can see this with CoinGecko's latest industry report for Q3 of 2023. On here, you see the top 10 centralized crypto exchanges. Binance has started the year at 63.75% trading volume, but has continued to decline. And by September, it was only at 43%. And based on this report, current rankings is only at 36%. Now, will the price of BNB fall in this cycle? Well, that's hard to say. The bull run itself can still carry most of the top coins and bring the price up even just slightly. However, BNB Coin's valuation of $37 billion makes it the largest exchange token by far. And thus, I believe BNB is highly unlikely to outperform Ethereum and Bitcoin from its current valuations. Sure, BNB may stay in the top 10 and retain this $30 to $50 billion market cap. However, there are many more exchange and their own tokens that are coming up, and they're quickly growing and potentially will replace Binance and take some of their market share away, and these will be much better picks. Some of the exchange coins that I am watching are OKX's token OKB. So OKX exchange is gunning for that #1 spot in crypto exchanges, and they have been really successful at this, having launched some huge projects recently such as Big Time before Binance listed them. And they're gaining a lot of traction in the latest Ordinals and BRC20 crates. They were the first to integrate that market and all the trading is happening on there, not on Binance. Another one that's really interesting is Mantle, which is the layer 2 network built by Bybit and was initially called BitDAO. They also take on a more community-governed approach and their entire treasury is used by the DAO instead of the Bybit exchange. Some other exchange tokens that are better bets than BNB, in my opinion, are things like Crypto.com's Chronos coin. We have BigGet token, which is still growing as an exchange overall very quickly pop up in the market. And things like MEXC with their MX token, which is honestly a very reputable and dominant exchange today. MEXC takes up 5% of the total volume in crypto today. In my opinion, this gap between the Binance token valuation of 37 billion with the other competitors ranging between 1 billion to 10 billion, this gap will be closed quite soon. And I expect Binance BNB's market share to flow into its competitors. And that is why BNB is my first coin that I would sell right now. The second token that I would sell right now is actually Cosmos's Atom token. Now, bear with me, I'm not saying Cosmos technology is bad, but I just think the Atom token itself is not a great investment for long term. Instead, there are much smarter picks in the Cosmos ecosystem that have better value accrual. Now, the whole thesis around Cosmos is with the Inter-Blockchain Communication Protocol, or IBC. This is an open source protocol that any chain can adopt, and it opens them up to connect with any other chain using simple bridges and message passing. The ease of integration and the long history of Cosmos is what makes IBC so successful, because most blockchain ecosystem out there are supporting IBC today, which means when you develop using the standard, you can connect to every other blockchain natively interoperable. However, the adoption of IBC doesn't contribute to the Atom token value itself. This has always been the biggest problem for Atom as an investment. I understand why this is the case, because the founder of Cosmos, Jae Kwon, you might have even have heard of him, but he's this very fundamentals driven and non-hypey type of person. And you see on his Twitter, he says he never sold his soul, and he has actually moved on to another project called No Land, which is this other even more pure technology project. So for the past few years, Cosmos itself really didn't have this leader, and instead is functioning as a public goods technology project, which led to really good technology adoption because every chain can just easily integrate IBC, but the Atom token price has failed to catch on to all the hype waves. Now in October 2022, Cosmos tried to revamp this with the Atom 2.0 tokenomics upgrade. They changed the Atom token issuance rate, and they introduced things like interchain scheduler and interchain allocator, which technically do feed back to the Atom token price. But none of this really gained any traction, as people were just still using the technology freely. The last potential attempt to revival for Atom is with interchain security. This is a program where new chains launching on Cosmos can choose to use Atom tokens staking power to power their own validators, and instead they don't have to bootstrap their own validators and ask for node operators to come in. This makes it much easier to launch a new chain using Cosmos, and in return their staking power and their tokens and their revenue will go back into Atom as rewards. Even with how good this program sounds, in the first year of the launch of interchain security, there wasn't really much adoption. But in summer of this year, this has finally changed with the launch of a new chain called Neutron. We have covered Neutron in our 2024 crypto portfolio video. You should go check that out for a deep dive. But just a quick summary, Neutron is the consumer hub chain that is kind of like the successor to the Cosmos Hub chain. You see, the Cosmos Hub doesn't support smart contracts, which was one of the biggest hurdles for its adoption. Even though the IBC connects so many tokens and they can all bridge in, there is no central place for all of these tokens to interact with each other in DeFi. Now, Neutron is this consumer-focused chain that does support smart contracts and is backed by all of the main builders in the Cosmos ecosystem, such as Informal Systems, Delphi Digital, and all the other top builders. And this is as official as it gets. The only support that it doesn't have is from the founder, Jae Kwon himself. So with Neutron, what you have is this new environment that can finally do DeFi with the power of IBC, that can connect every other blockchain out there, and there is real value accrual to the Neutron token. And last but not least, because it uses replicated security coming from Cosmos Atom, this means it doesn't have to have its own stakers. Instead, it's secured by the Atom token staking itself. And when you compare the valuation, Cosmos Hub currently sits at 3.3 billion, while Neutron is at 1.17 billion. But my thesis for this upcoming cycle is for Neutron to actually flip Cosmos because it has way more going for it. And I believe Cosmos Atom will continue to be hard to grow due to its lack of leadership and poor tokenomics. The consumer chain of Neutron is much a better bet on the existing adoption of IBC that connects almost every other blockchain. And the smart contract layer of Neutron finally puts Cosmos technology on the map against other layer 1s. This is why I think Neutron should outgrow Cosmos Atom token this cycle, hence why I would sell any Atom token I have and replace it with Neutron. Okay, moving on, the third category of coins that I would sell right now are actually the super overhyped airdrop tokens on Solana. You see, for the past couple months, Solana has had a huge hype wave bringing up its revival, and along with it, some of the latest dropped projects conducted airdrops and their tokens are super overvalued. The most notable three are PYTH network, which is a competitor to Chainlink. You have Jito, which is a liquid staking protocol for Solana, and you have Jupiter, which is a decentralized exchange aggregator on Solana. Now, let me explain why I think these three projects are super overvalued right now. First of all, PYTH network is a oracle provider similar to Chainlink. It connects off-chain data to on-chain for things like DeFi use case. We can easily compare the adoption of PYTH against Chainlink. So here on DeFi Llama, you see Chainlink has secured 345 DeFi protocols and has a total value secured under its oracle provider of $16.79 billion. Versus for PYTH, they have 133 protocols secured, but only a total value of $1.38 billion. So if you take just an average of these two metrics, PYTH is about as large as 1/3 of Chainlink, optimistically speaking, based on number of protocols, and as small as 1/10 of Chainlink's adoption sites based on the total value secured. So let's just say PYTH is 1/5 of that of Chainlink's value. Even with that average number, when you compare the fully diluted valuation of the two projects, you see the big difference. So Chainlink is valued at $14 billion FDV today, and PYTH is already at 3.8 billion FDV. So no matter how you look at the ratio of market cap to the total value secured, PYTH is definitely overvalued compared to Chainlink. Not only this, but when you look at the circulating supply versus total supply, you see PYTH only has 1.5 billion of the 10 billion total tokens circulating, which means the upcoming unlocks for the token is still very large, and that's why the price is able to sustain at such a high level, because there isn't that much tokens circulating yet. Now, PYTH is one of the good ones. It gets even worse when we look at Jito. So Jito is a liquid staking protocol on Solana. You see here, you can stake your SOL with it, and they have a APY of 6.85%. This kind of LSD protocol is nothing new. So if we go on DeFi Llama again and look at all the liquid staking projects, you see Jito here ranks number 6, and for an LSD protocol, the number one metric to value them is with their total value locked, or in other words, how much staking goes under their protocol. And you see Jito has a total value locked of $475 million. But similarly, for the next project up, which is Marinade, which also works for Solana, they have even more TVL at 500 million value locked. However, when you compare the two tokens valuations, Jito is already valued at $2.8 billion FDV, but Marinade is only valued at $317 million FDV. So even though Marinade has slightly more adoption, it's valued at 90% off from Jito's price. Why is this such a big difference? There is nothing that explains this other than Jito is actually severely overvalued. Even worse, when you compare Jito to the largest liquid staking protocol by far, Lido, which has $20 billion of total value locked, it's even crazier. So even Lido only has $2.1 billion of FDV, whereas Jito already is bigger than Lido at $2.8 billion FDV. So no matter how you look at it, Jito is super overvalued right now. Last but not least, the third super hyped up airdrop that's coming up for Solana is Jupiter. Jupiter is this decentralized exchange aggregator. You can think of it similar to 1inch, and it also acts as its own decentralized exchange like PancakeSwap or Uniswap. So again, let's compare all of these aggregators based on their trading volume. That's their biggest adoption number. You see here, Jupiter is the number one most adopted decentralized exchange aggregator, and it has a daily volume of 550 million versus 1inch at 150 million. So it's about 4 times larger than 1inch. And 1inch today is trading at a fully diluted valuation of $500 million. So if you times that by 4, that gives us maybe $2 billion of fully diluted valuation. And that is putting all things aside, like 1inch's early adoption in DeFi and their widespread penetration as they support support 9 chains instead of Jupiter, which only works on Solana. However, even with all this, when you look at Jupiter's current predicted price, right, Jupiter has a total supply of 10 billion, and on some of the prediction markets, there is already Jupiter contracts trading, and you see Jupiter token is trading at 70 cents potentially at launch, which gives it $7 billion of fully diluted valuation, way above the projection of 2 billion. And if we compare Jupiter to some of the leading decentralized exchanges, such as PancakeSwap or Uniswap, you see Pancake has a 300 million daily volume and Uni has 1.4 billion daily volume. So the volume of Jupiter is about 50% larger than Pancake. You see Pancake's fully diluted valuation is only at 900 million, so 50% above that puts it right around 1.3, 1.4 billion. So again, something like just below that 2 billion range. And even Uniswap is only trading at $6.2 billion fully diluted valuation today. This is by far the most well-known, most adopted decentralized exchange. So for Jupiter to be trading day one at a higher valuation than Uniswap, that's just insane. That's completely overvalued, and I think Jupiter needs to fall to at least below 2 billion, probably around that 1 billion mark. I think that might be fair. And last thing to remember is that we are literally in a Solana hype wave craze right now, and that has led to a ton of trading volume on Solana. So you see Jupiter only supports Solana chain, which means once the trading volume moves away from Solana, this volume of Jupiter will also drop quite dramatically, which in turn also comes the potential valuation drop that people expect. To be fair, these are all legit projects launching on Solana. However, the reason why these tokens are so overhyped right now is because this recent Solana wave fueled by airdrops have brought in a huge amount of new investors that do not know how to dig into the metrics to understand the protocol. This allows the project teams and the market makers to list these airdrop tokens as super inflated valuations, and the unexperienced investors will still buy them. This way, the airdrop hype on Solana keeps the price up at high levels, while the airdrop recipients and the early investors can take profit at super high levels. Eventually, this will all come down, in my opinion. So the takeaway is, if you are able to get these Solana airdrops, such as Jupiter, which is still coming up, by all means, take the free money. But I would definitely sell all of these airdrops right after they launch, and I do not plan to hold any of these tokens as they are all heavily overpriced. In each of these tokens sectors, there are way smarter choices for long-term holds out there if you just do a little bit of digging. Okay, the fourth altcoin that I would sell right now is Celestia's token TIA. Celestia is one of the most hyped up projects in the past 2 months in crypto. Looking at its price, it went up from the launch price of around $2.30 all the way up to $14, doing almost a 6x. Now, Celestia is in my 2024 portfolio, and I have covered it in our video before. So for the full deep dive on the Celestia technology, you can go check that out with the link in the description. However, please keep in mind, I was getting into Celestia way earlier, right after the launch, around that $2 to $3 range. And at today's price, I just cannot see this still being a good value. You see, most people don't understand Celestia's technology. They just know it's a layer 1 in the Cosmos ecosystem, but they have never tried it. So Celestia is actually very cool. They are the first to invent this modular blockchain design where it separates the data layer and the consensus layer from the execution or the smart contract layer. This means you can plug any layer 1, layer 2 stack or programming language on top of Celestia and use it for consensus and data storage. They're also the first blockchain to support a light node that's fully functional on mobile, which means you can actually join the network and help secure real blocks and store real data using just your smartphone. Now, while I am bullish on the long-term potential of Celestia, in the short term, I believe the TIA token is reaching the first local top in terms of short-term hype. The price growth is clearly outrunning the technology adoption. Now, on the tokenomics side, Celestia also did a large airdrop where 20% of the total supply was given out. And based on the current circulating supply, there is still 50 million tokens to be claimed, which is worth over $600 million of free Celestia tokens to be claimed and potentially dumped on the market by the airdrop recipients. And the long-term tokenomics of Celestia is also kind of worrying because from now until October 2024, there is no supply coming out, which means there is a huge token unlock happening in November 1st, 2024. This design is very similar to other airdrop projects like Arbitrum, Optimism, or Sui. Now, when we look at Arbitrum's price performance in the first year after launch, notice how it had its initial hype, but then quickly price started to decline, and and eventually bottomed out somewhere around the 6-month mark after launch. People will catch on and realize that the fully diluted valuation for this airdrop project is very high. Then after that first wave for Arbitrum in October 2023, the price started to run up and Arbitrum actually started to see more and more adoption, more and more users, and they have started to push marketing more heavily and launching incentive programs, etc. And that has led to revived second wave. And I believe Arbitrum will still head higher from here. So moral of the story is that with these airdrop projects, the first year will be a tough period to get in as a long-term investment. Usually around the 6 to 7 month mark, price should come down and reach a bottom period, and then the project will start to push the price up with more marketing again as it gets closer to the token unlock event, because the early investors and the team will need the token price to do well and become popular again going into the unlock in order to take their initial profits. There's nothing wrong with this, it's just how the industry works, and once we know how this works, you can try to play it in two ways. So if you're a trader, the strategy I would take is to wait for the current price to cool off a bit going into the next few months. I would say 6 to 7 months from now, Celestia price should be a little bit lower than here. Then you can get in when the hype fades for Celestia after the airdrop, but the technology adoption actually increases. And then you ride the second wave up and take profit before the token unlock happens in November 2024. So aim to sell in October 2024. Now, if you are a long-term investor, then I would try to have an average entry sometime in mid 2024 and look to load up on more Celestia after the unlock happens in November 2024. But no matter if you're trading this short-term or looking to hold long-term, I just think the current valuation of $13 billion for Celestia is overvalued, it's overpriced, and it's not sustainable. And that is why I think it's a great time to take profits from Celestia and look to enter back in at lower prices going into 2024. Okay, the last category of altcoins I would sell right now is Ordinals and the BRC20 token craze. Now, the BRC20 and Ordinals hype is real, and it opens up the world of DeFi to the entire market cap of Bitcoin. However, the short-term hype is completely driven by the craze in China, and most of these tokens have no utility at all. They're just meme coins. For example, some of the most well-known tokens using the BRC20 standard include ORDI, which was the first token launched on the standard, but even to today, it still doesn't have any utility at all. Two other BRC20 tokens that everyone is talking about are SATS, which is honestly just another meme coin you see on its website. Basically does nothing, and it's just paying homage to the Satoshi and the SATS ticker. And this is already trading on every exchange and valued at $1.5 billion. Another one that everyone is hyping up is called RATS. This is kind of a play on SATS as another meme, and this is already trading at 300 million with literally not even a website, just a pure token ticker. Now, why is this happening? We have to look at some of the early technology of BRC20 and these tokens. There's this protocol called inscriptions and ordinals for Bitcoin that allows you to inject certain amounts of data on the Bitcoin blockchain, kind of like metadata. It's not exactly written on chain as a smart contract, and that has led to the creation of BRC20 tokens. Although these tokens have come a long way, they are still very early stages and there's not much DeFi functionality you can do. This is in stark contrast to the current stage of ERC20 tokens on Ethereum, which you can do staking, farming, trading, etc. With Bitcoin's BRC20 tokens, you cannot do any of that yet. To be fair, this is very similar to the early ICO craze on Ethereum. In the initial days of Ethereum, there weren't any decentralized applications. People were purely launching tokens for the sake of launching tokens with just a website. This has led to a lot of people from China and from third world countries getting into this craze. So you see, in China, they literally host these conferences teaching people how to set up a Bitcoin wallet and how to free mint these BRC20 tokens, how to pick them, and just by doing kind of repetitive work by these stay-at-home moms, they can potentially make good profits. Here's another example recently with this new ticker. Obviously, don't go and buy this. You cannot even buy it. It's most likely a pure meme. But you see, these people are not experienced crypto investors, but they just get together and try to mint as many of this as possible. And all of this process cannot be botted because the infrastructure on BRC20 right now is so early stages right now, which has led to there not being any bots, and it's really a fair playing ground for anyone to manually mint a lot of these tokens tokens and actually make some small profits. This is why you see tokens like ORDI and SATS having so many holders. So SATS already has 46,000 holders, very large number. If you understand Chinese, just go on any Chinese social media app and look up their crypto ticker. All you will see today are these inscriptions and BRC20 crates. They don't care about Ethereum, they don't care about DeFi or GameFi or anything else. This is really reaching a bubble stage in China. And my current thesis is that this bubble will start to pop quite soon because all of these people, they don't understand the fundamentals of these technology at all. And this is why I would sell the most popular BRC20 tokens today that are freely minted, like RATs and SATs and whatever the 10 other coins pop up every day. However, I am actually very interested in the technology that enables these BRC20 tokens and what the potential of them could be once DeFi has fully integrated these protocols. Those will have true potential for this entire bull run. And the Chinese grandmas and the MLM groups are still undereducated on these fundamental aspects, and that's why I think these are much more value to get into right now. So I'm talking about things like wallets, bridges, decentralized exchanges, DeFi protocols like stablecoins or lending protocols, launchpads, etc. All of these infrastructure that are currently being built for the BRC20 and for ordinals, I think those will be really good picks going into this cycle. I am working on a full guide on the BRC20s and ordinals inscription ecosystem and my top coin picks that are true utility projects into this sector. So subscribe to the channel if you want to see that. We are already seeing this rotation happening. So things like the multi-bit bridge or MUBI token, this is the first functioning bridge between the EVM chains like Binance Smart Chain or Ethereum to the world of BRC20 with Bitcoin. And this token bridge project actually works. And you see this is one of the most successful launches in this past month, going from 2 cents all the way up to 30 cents. And in fact, we have covered this project in our Discord as well. When we first covered it, it was still under 4 million fully diluted valuation. And today you see it's already trading at $250 million fully diluted valuation. So people understand that there is this blue ocean for infrastructure projects on BRC20s, on ordinals, on the Bitcoin ecosystem. And I think soon we will see this rotation happen and an explosion of real utility projects on the Bitcoin ecosystem. To summarize, the currently most popular BRC20 tokens like SATs and RATs are just meme coins, and that's why I would totally sell them right now from this hype wave. However, I am bullish on the BRC20 protocol and technology overall, and that's why I will be getting into this ecosystem and doing more deep dives on them very soon. Okay, that wraps up today's video of the top 5 cryptos that I would sell right now, and I have given you guys my full analysis on why they are overvalued and the certain alternative picks that are much higher potential and much less discovered compared to these projects. Let me know down in the comments if you agree or if you are a fan of any of these tokens and you think I am wrong. And also, if I have missed any other overvalued projects, please let me know as well. If you like this content, subscribe to the channel and also join our Discord with the link in the description, or go to discord.gg/virtualbacon. This is where I post my free personal alpha as I'm analyzing the market, as well as our daily altcoin alerts and Bitcoin alerts with trade setups that's given for free. And last but not least, we have almost 10,000 members in the Discord already, so you can have a community discussion for any projects you discover. Okay, that's it for today's video. Thank you guys for watching, and I will see you in the next one. Cheers, bye-bye.